All right, good morning, everybody. This is Nate Bear, lead technical tactician for Monument Traders Alliance and Trade of the Day. And in today's video update, just kind of want to go over the indexes. We've got a unique situation happening this morning. It's about 8:20 or so, Tuesday morning, the 4th of November. And as you can see, the pre-market here, the SPY is gapping down pretty good. So if I turn on, let's do like a 30-minute chart, and I'll show you the extended hours. We've got SPY gapping down pretty good here. So we've had this nice big run, this daily squeeze on the SPY, which fired long and has pushed us into sort of both Fibonacci extension targets, all working off of this, Trump China candle day, right? Target 1, target 2, both have been met. And now we are pulling back, and it's going to be sort of interesting. So I'm pretty light at the moment. I've got a couple of positions, a couple of spreads, but nothing really major. And I'm feeling pretty good, pretty good about that right now. But I'm kind of thinking about, like, okay, yeah, we're going to dip. And is that going to be just another buying opportunity? And I think it will. So I think the biggest thing today is, as the markets are dipping, don't feel a huge rush to go and buy options that expire Friday for a bounce back to new all-time highs, right? Do we get a move higher into the end of the year? I think we do. Are we going to bounce back and make new highs today? No, probably not. So give yourself time on your trades, whatever that may be. If you're an options trader, if you're a stock trader, don't pile into a position here, when the SPY is at 676, because if the SPY dips down here, or dips down here, you want to be able to add to those positions. And I'm not talking about just on the SPY. This could work with a number of different things. One of the charts I like a lot here is Amazon. This is a weekly chart. And looking at this weekly squeeze, I want to buy it, but I'm gonna, I'd really want to try to buy it on a retest of this all-time high, right? And I would be willing to buy it if it pulled back to the 8 or the 21 on this weekly chart for an eventual move higher into the end of the year. So just don't be in a huge rush is the biggest thing, okay? All right, next. The chart that I want to show you here is actually the weekly chart in HIMS, H-I-M-S, and they just had earnings, and you can see here, again, if I go to the 30-minute chart, they just had earnings, and they're up actually today with earnings. So I'm looking at this thinking, okay, I've got a weekly chart. They just got through earnings. Can I just get something out into actually next year and play this weekly chart for an eventual move higher? So that's what I'm going to look at doing, okay? And if we look at the option chain on HIMS, now these aren't going to be cheap, and that's fine because we're going to give ourselves plenty of time. So let me go out all the way to, let's look at like March of next year. Again, this is a weekly chart, so we're going to give ourselves plenty of time. What I'm going to suggest here, these actually be down a little this morning because of a little bit of IV crush through earnings. But I'm going to recommend the $50 calls and HIMS right in through here, out all the way into March of 2026. And then what we do is we'll say, okay, we've got a great risk reward trade. If we close underneath this 55 EMA, which is about 41, 42, we're done. So we're giving ourselves literally like $4 of risk on a weekly chart. It's pretty good. And the upside to me here is new all-time highs over 70. So we're giving ourselves what, $4 worth of risk versus $25 of plus of reward. That's a pretty awesome risk reward trade, giving ourselves plenty of time. This is one I think you can just buy and sort of sit on. Again, with your risk defined. So anyway, that's what I've got for today. I'll get this marked up and sent out. I hope it helps, and I'll talk to you guys soon. Have a good one.